Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is the Russell 2000 Index, ticker symbol RUT. And as you can see, I left my lines on the chart from last week's report so you can see how the forecast worked out. And we had mixed results this week. But let me start off with the Russell 2000 right there. You could see that last Friday right here, that red candle, I said we would most likely go down to fill this gap and then bounce. And I said that there's an 80% chance that the market would bounce because if you follow our gap fill rules, you know that 80% of the time gaps fill. And a lot of the times after gaps fill, the markets reverse. So right now you can see that we went down, we bounced. The end of the line right here is my target. We hit that actually on Tuesday, Wednesday, red candle, moved back up, and today we gapped up. And this is a very strong candle because you can see as I zoom in there are hardly any shadows above or below the candle. And that's telling us that the markets will most likely go higher next week. So I'm going to forecast that we will most likely go up to test this high right here. That's the high from April 29th. So I'm going to draw my lines just like that. And you can see that because of this gap, we will most likely come back to fill it and then bounce again. So I'm going to erase this gap fill support level and I'm going to move it up to this high where that gap is. So we're probably going to stay in this range next week and maybe even the week after. And so far, this is looking very bullish for next week. So if you look down here, the stochastics oscillator is moving up and the CCI is moving up. Again, last week I said the CCI would most likely pivot and start to move up. It did just that. And so I'm bullish on the Russell 2000. Now, if we take a look at the diamonds, that's the Dow Jones Industrial Average ETF, ticker symbol DIA. Again, my lines are left on the chart. I said we would most likely move lower. The end of that line, let me magnify that for you. The end of the line is my target. So we hit that on Monday. I said we would possibly bounce, but I did not draw another line higher because my original target was this low right there. So now what? Well, you can see that the stochastics are moving higher. The CCI is moving higher. I'm going to say the same thing as the Russell 2000. We're probably going to go up to test that resistance just like that. And then we'll have to see what the volume does, because if the volume starts dropping off, then we could most likely pull back from that high just like that. But again, this pullback is going to be contingent upon a drop in volume, so we have to keep an eye on that. Okay, moving right along. If we look at the spiders, ticker symbol SPY, the markets did not move down on Monday like the rest of the Russell 2000 and the diamonds because it just didn't happen that way. The spiders are an index that measures 500 stocks. The Russell 2000 is small caps. So we did not move down at all. We, in fact, just kept moving higher Monday, Tuesday, Wednesday, right through the end of the week. And I'm going to erase that line. So that was a no-go on the target. But look right here. This is a resistance high. And I think next week we're going to break out of that high just like that. One of the reasons why, again, I'll zoom in here for you. We're seeing an increase in volume, slight increase, but an increase in volume as the market is approaching that resistance point. Let me just make that a little bit more horizontal. Okay, so it's from this high, just like that. I think we're going to test that and break out of it. And so the stochastics are showing an upward hinge. The CCI is showing higher. The CCI is something you're going to have to keep an eye on because that leads the stochastics. In fact, it's a more sensitive indicator. So we're going to keep an eye on that as we break out into that most recent high right here from April 29th. Now, if we look at the VIX, which is a contrarian indicator to the S&P, you can see that the VIX just kept moving lower this week. And so it didn't go down all the way to test that support level, but we actually retested my target from last week. And so that was a no-go. But here's what I can tell you, that the momentum is still pointing lower on the VIX. And this is going to be the support level that we're most likely going to test. Look at that stochastics. It's turning lower. The CCI is turning lower again. But I think that VIX pullback here to test that support is going to be short-lived, and then we'll start moving higher just like that on the VIX. Okay, finally, let's look at the Qs. This more or less represents the tech sector. Like I said in the beginning, we had mixed results. The VIX moved lower, but so did the Qs. That's interesting. On Monday, we pulled lower, and then all of a sudden, the markets towards the end of the day showed a bullish engulfing pattern just like that. So we had an about face. So we did not hit our target, but look at how nicely the market bounced off of that 20-period moving average. So you can see that as I erase these lines, all of the indicators are still pointing higher for the Qs. And so I think we're going to move higher next week. But then you got to keep an eye on the stochastics right here. And you have to keep an eye on the CCI, because as soon as the CCI starts pulling back and crossing lower below that 100 mark, which is on that scale, that red line right there, then you could possibly see the pullback in the Qs. So if you're long or you think about getting long, I would keep a tight stop and make sure you're protecting against downside risk. Feel free to go to the Market Guys website. You can see a video tab right there. If you click on that, it's going to bring you to a library of very short videos that we call Market Shots. And as I scroll down here, you'll see the 1% rule for managing risk. That's what I'm talking about. You have to have a risk management plan in place with this market, because you don't want to expose yourself to a catastrophic loss, and this helps you sleep at night. Just to the right of the 1% rule is trading the gap. All you have to do is click on that, and you'll learn about the 80-20 rules that apply to gap trading, and that will help you with a new strategy. So that's it for now. Have a great weekend. We look forward to speaking with you on our open house Q&A, which is May 18th. To go to that link, click on the Register Now button, and that will bring you to the registration page. And you can ask me questions. We'll analyze your stocks, and we have an action-packed hour with that open house. So again, have a good weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.